Joining us now exclusively is SoFi CEO Anthony Noto. Anthony, welcome back. Good to see you.
Good to see you as well.
So why is the stock down 9% despite a strong increase to guide? What is the street taking from this?
Yeah, I think it's important to focus on the results and what that means for the full year and then what that remains for our 3-year outlook. So in the quarter, we achieved 26% year-over-year growth in revenue, $581 million. We had 25% EBITDA margins. We grew that almost 100% at $144 million. More importantly, we have grown tangible book value per share 16% sequentially by about $600 million. We had record deposits of $3 billion and really strong overall performance. The most important thing about those trends that I'd point out, and the reason why 2024 is a transition year, is the growth was driven by low capital, high return businesses, our technology platform business, and our financial services businesses. Those two businesses, when combined, grew 54% year over year against lending that was flat. As we came into 2024, given the uncertainty in rates and the economy, as well as liquidity for the industry, not us, and despite having excess capital, we made a decision to put the resources behind these high return businesses that actually are big enough now to drive our overall growth and profitable enough to do that. And so that's the key message coming out of the quarter, is that transition is taking place and going incredibly well, which sets us up for a great 2024. We actually raised 24 revenue guidance by more than our beat. The comparison to Q2, we'd not provided Q2 guidance before. The street had an estimate there that was above what we guided to, but for the full year, estimates will be going up relative to consensus by more than our beat in Q1.
Okay, so thanks for clarifying all the expectations game. What can you tell us about credit quality right now for borrowers?
Yeah, what we've said is that credit will normalize back to pre-COVID levels, and we're on track to do that. Our life of loan loss targets for our unsecured personal loans are 7 to 8%, and we remain comfortable with those expectations. We are higher in credit than most. We focus on prime credit, and we have very high FICO scores and good cash flow ratios when we underwrite credit. But we've taken a more conservative view on credit, primarily because of the fact that it's not clear where rates will go. At one point last year in October, people were talking about higher for longer. Then by the end of the year, they were talking about 6 rate cuts, and now we're looking at 1 to 2 rate cuts. That type of volatility and uncertainty creates a backdrop that we think allows us to be more conservative in lending and much more aggressive in technology platform in our financial services business. A lot of people don't realize that in our financial services business, we have SoFi Money, SoFi Invest, SoFi Insurance, SoFi Credit Cards, and a few other high margin businesses. And now it's profitable, which allows us to scale that acquisition. And that's what's driving our 44% growth in members to 8.1 million now and almost 12 million products.
Anthony, there's been some dissection of the eco data, the macro data last few days, specifically the saving rate going to the low 3s. And some argue it's a sign of stress, that consumers are sort of living on the edge. Others argue this is all about the boomer generation spending every last penny of their nest egg. Do you have any idea what's going on?
Well, we definitely have a member base that's saving. Our deposits grew a record $3 billion in the quarter. We provide a very attractive interest rate of 4.6% on your savings with direct deposit or with a large recurring deposit on a monthly basis. So we're seeing great trends there. And it's not just the growth in deposits, it's also the growth in spending. We had about $1.8 billion of debit spending on the platform, up from the low $1 billion last quarter. So we're annualizing about $8 billion now. And again, that's on a member base in SoFi Money that's at 3.5 million.